Welcome to the Delaware Mortgage Rates Weekly Mortgage Market Update for the week of December 3rd, 2012. Hello, I'm John Thomas with Primary Residential Mortgage here to give you your update. Well, if we look last week, the mortgage rates did move lower. And if we take a look at the bond chart, you can see that. You can see from last week, the previous weeks, the rates were actually moving higher and the trend was moving higher. We were able to reverse that trend last week, and you can see pretty much rates have gotten better as the bond has improved. Now, what caused that? Well, the big issue was the fiscal cliff, which is looming over our heads. The Congress has not reached a deal on that, and it's not looking good. So that has basically have investors selling off the stock market, moving their money into bonds, helps the bond market, moves home loan rates lower. Now, what is this fiscal cliff you keep hearing about? Basically, if Congress does not reach a deal and enact some legislation, January 2013, a bunch of things change. The first big one is individual and business tax cuts will expire, so tax rates will go up for everybody. Second thing is tax rates will go up in addition because of the health care law that was passed by Congress in 2013. Tax rates go in to pay for that law. So there's some tax increases from that. And then we also have the long-term jobless benefits will expire. And then on top of that, there's mandatory spending cuts to programs such as defense, Medicare, Medicaid, that kind of stuff that were enacted in 2011 by Congress to deal with the debt ceiling back then. So if Congress fails to act, the CBO, the Congressional Budget Office, has announced that $600 billion will be removed from the economy if we go over the fiscal cliff, and that will certainly put us back into a recession. So that's why the stock market, people are moving out of that into the bond market in anticipation of another recession. And in addition to that, Europe has their own debt problems they're trying to deal with, and they have not gotten any solutions over the last 2 years. Things have just keep getting worse. So that means investors around the world are investing in our bond market, which again is helping mortgage rates stay low. And then the third big piece is the Federal Reserve is buying mortgage-backed securities to help keep home loan rates low. So what does that mean for you? That means home loan rates are once again at all-time record lows. It's the best time to purchase a home or refinance a home. So if you need help with that, give us a call in the office. We'll definitely help you out. Now, one of the fixes to take care of this fiscal cliff is to increase revenue. Increase revenue, help pay down the debt. One of the ways they're talking about doing that is eliminating tax deductions that people take. One of the big ones on the table right now is the mortgage interest tax deduction. So that could actually hurt the housing market and hurt families that own a home because they'll lose, actually, it'll be an effective tax increase on them. So that's being talked about, kicked around. Now, if we look at other news that's helping home loan rates stay low, the core PCE, which is a measure of inflation, came in very low, very tame. It actually dropped down from last year. It dropped down from 1.7 to 1.6%. And we know inflation is the enemy of bonds. So if inflation stays low, that will help keep home loan rates low throughout 2013. New home sales came in for October 2012, and they were actually 0.3% down, and they came in lower than expected. Now, some people were saying, oh, this puts a shadow on the recovery. Not really. Now, when you look at the big picture, we're still up 17.2% from the previous year. And October is routinely a slow month for new home sales. So I don't put too much stock in that, and 0.3% is not a big number. We're still up 17.2%, so it wasn't a big deal. Now, the Case-Shiller Home Index, which indexes 20 markets around the country to get an idea of what the housing market is doing. They said there was a 3% increase in home values on average in those 20 different markets. So that shows on national average home prices are going up. So that does support a housing recovery. And then the last thing is the Federal Housing Finance Agency announced that conforming or conventional loan limits, those for Fannie Mae and Freddie Mac, will remain the same in 2013 as they were in 2012. So for Delaware, Newcastle, Kent, and Sussex County, the maximum loan amount for a one-unit property to go conventional is $417,000. Now, in the local news, the Delaware State Housing Authority has announced the end of the Live Near Your Work program. That program is done. No more. You cannot use that program. They did announce that last week. And then in the local news, also the next free first-time homebuyer seminar is in Newark, and that is Saturday, December 15th. There's 2 sessions to choose from. You can go from 10 a.m. to noon, or again, we'll have it from 1 p.m. to 3 p.m. That's at the Christiana Hilton Hotel in Newark, Delaware. And then the next one in Dover is Tuesday, December 18th. That's at the Dover Sheraton in Dover, Delaware. And that is from 6:30 p.m. to 8:30 p.m. You can register for either one of those seminars by giving us a call at 302-703-0727, or you can register online, www.DelawareHomebuyerSeminar.com. DelawareHomebuyerSeminar.com. Now, if you want to take advantage of these crazy low rates, you want to refinance, or purchase a home, give us a call, 302-703-0727, or you can apply online, prmidelaware.com, prmidelaware.com. Look forward to seeing you next week.